I wanted to make a quick video on trading plan for beginners and Forex, or if you're a seasoned trader and you'd like interested in smart money trading like supply, ICT concepts, Wyckoff methodology, supply and demand, fair value gaps and balance, any of that, this is for you. So when you're trading smart money, this is a good trading plan to have, and this is actually worked for me. And we're just going to quickly go into it right here. So we have number one is structure. Number two, point of interest. That's what POI stands for. Supply and demand, and order block. Number three, set alerts / identify liquidity. And number four, rejection candles plus breakup structure, BOS. Number five, entry and risk management / risk to reward. So on the first one, here's your trading plan. You want to identify structure. So for example, we have down structure going downwards. So we have like a high, we have a low, we have a lower high, we have a lower low, and that is a structure we identified. Say we identify on, like, let's say this is Euro USD, okay? The next thing you're going to do once you identify structure, what you're going to need 4 pieces of highs and lows. So you can go ahead and do it forever, just more. Like you can put, like, for example, if it continues, you can obviously do that and all that, but right now, when I identify my trades, I just focus on 4 pieces of structure with unhealthy price action. So the next step is, now we identified our market structure, so what are we doing now? We need to identify a point of interest. So for me, my points of interest are areas where I'm interested in taking trades on or looking for setups. So I'm looking at order blocks or supply and demand zones, or unhealthy price action, fair value gaps, all of that, unhealthy price action. So what I would do is, since I'm selling, since we're in down structure, I would look to take trades above 50%. So this is called the GAN box tool. You can use it on TradingView. I'm using it as kind of like a Fibonacci. And so this is called equilibrium. So if I'm looking to take a sell trade, I would rather sell price at a higher rate than wait than sell it down here and have FOMO, a fear of missing out. Because what happens if you sell down here while it's already going down, thinking it's like, oh, it's going down, I make money. What's going to happen is you're going to get stopped out. It's going to go up. But what we're going to focus on is we're going to focus on looking for points of interest and entries above this 0.5 line in the middle here. So this is the golden area where we want to look for trades, okay? So say we have a point of interest. Let's say we have an order block or demand zone that's right here, right? Okay, so that would be our second step. Then what you're going to do after you identify your area that you're interested in looking for a setup in and looking for a price to respect off of and reject off of, what you're going to do next is you're going to set alert. You're going to set an alert. You're going to set an alert right before the yellow box on TradingView, so it can let you know when price is getting there. And also, you will also identify liquidity. Now, usually when it's going back to your area, it will do a little something like all this little retail movement here, let's say, all this crap, little movement, and then let's say it hits your alert. So you set your alert / identify liquidity. So this is the third step, remember. So now that we set our alert and it came to our alert, what we want to do is, once it comes to our alert, is you can do this either some people do this, identify liquidity before it gets to alert, but I personally wait for it gets to the alert so it can actually build price to identify liquidity off of. So once we get to the alert that we set the alert from and it actually reaches it, we want to identify liquidity, right? So right here we have some double bottoms. So that's our liquidity going downwards, okay? Then step 4, we need a rejection candle and break of structure. So hopefully when we have here, whenever you have a supply and demand zone, order block, fair value gap, Wyckoff schematic, anything, what you want to do is you want to see a rejection candle or a break of structure. You want to see a rejection candle and a break of structure. So what I mean by that is you don't want price to come into your actual zone. You don't want price to actually, you don't want candles to close in the zone. You want a tap and go situation. So what that will look like is, let's just draw a little line here. Let's say this little line I'm drawing into that yellow box is your wick. I know it's sloppy, guys, but you see a little line? Pretend that little line is the wick. So that is step 4, rejection candles plus break of structure. So we have the rejection candle. Sorry, we're still on step 4. We have the rejection candles. Now we need to break a structure. So we want a rejection candle / tap into our area of interest, which could be, like I said again, order block, imbalance schematic, whatever, supply and demand. And then now we need to break a structure. So what that means is we can have structure. The first piece of structure I identify is right here. And also, look, we have liquidity there. This also is liquidity. Even though it's not a double bottom, it's still a piece of structure. It's still liquidity. So let's put here. So it was demand that was being bought off of that zone. So we're going to go like that, and we're going to put a liquidity line right there. And what we're going to do is we're going to wait. The alert went off. Now we're just waiting for price to and break below either one or two of these zones. So what you could do before then is you can set another alert right there. But what I like to do is just sometimes I'll just sit there and it will literally do that right while I'm there in the morning usually because I'm trading London or I'm trading New York open session. So once it breaks your zone, you need what's called your entry and your risk management. So let's say it broke. God, that's sloppy. Say it's broke the zone. So now you need your entry and risk management, risk to reward. But before we get into that, I wanted to say one more thing. When it breaks your structure with a rejection candle like this, make sure the structure has unhealthy price action. What I mean by that is aggressive movement downwards or upwards when you're trading, not like this. So this first line I drew is proper, not like this. The second line is improper. Now you don't want like this little retail crap all the way down. You see how it's like wobbly? You want aggressive price action to break your structure. You don't want, let's say this is your piece of structure, this horizontal line. You don't want price to go like this and do all that shit. You want a firm, aggressive price action downwards. And basically, after we do that, now we do our risk to reward. So for me, I'm not going to even talk about my stop loss on YouTube because I'm tired of people in the comments that don't believe in ICT concepts, smart money concepts, Wyckoff methodology, or any concepts at all. Because if you were smart, you know that the big banks and institutions have precise areas of entries. Okay, so you don't have to have we don't have much drawdown when we're trading because our entries are based off of professional ideologies and professional setups. So it's not just technical. I have other videos that explain fundamentals as well. But this video, we're going to have a little stop loss at this exact area, no drawdown, tap and go entries. And then we're going to target, we're going to have this stop loss above the high of the point of interest or on the actual high, but I like to do above the high. And then we're going to target, here's the thing. Once it actually breaks it, you want to target the next low. And that is your next area of liquidity. So all the areas of liquidity before were just areas to confirm that we're going downwards. We're still going downwards. And to confirm that our point of interest was correct. Because if we're like this rectangle box here, if this was correct, if we're looking for entries at our points of interest at our entry zones, at our zones right here, then it should have aggressive price action. That lets you know that the banks and institutions are respecting your zone because they're the ones with the capital, you see? So that's why it goes aggressive, because they're the ones that actually move the market. So retailers can't move the market so aggressively. So our trades want to have like minimal drawdown, tap and go entries, and aggressive price action towards a take profit. Okay? So our take profit is going to be here. And then that would be how you would look for that would be your technical analysis trading plan. So this was like a little quick video. I know it's like kind of like, I was stuttering a little bit and all that, but you see the whole idea. Structure, the purple lines, point of interest, POI, step 2, POI, supply and demand order block. That is the yellow box here. That's my zone. That's where it's supposed to be. Set alerts right there at the $ zones here, the double bottoms and the liquidity. We did that. We had a rejection candle plus break of structure on step 4. We had a rejection candle right there that rejected the zone and then broke structure. And then entry and risk management. We did that. Stop loss above the box, and our take profit was here. We're managing our risk and our R&R. I'll tell you the details of the actual stop loss number and the take profit number, and those details are in my Discord. If you want to learn more about that, you can just message me or connect with me. But for now, this is your trading plan for technical analysis. Our fundamental analysis trading plan is in the next video. Like, subscribe, go on my Instagram. Guys, if you guys want to just ask me questions personally, I will reply back to you guys. I'm not like one of those people. My Instagram is at Black Wolf Tribe. That's my Instagram. Follow me on Instagram at Black Wolf Tribe. Connect with me now. Click the links in the description. Do all that. Write this down. Screenshot this. Screenshot this in your notes, guys. Screenshot this here. The trading plan. Screenshot it. right now. 3, 2, 1. Okay. Or you could just write it down, whatever you did. But this is what I basically had right here. This is the example I just wanted to show you guys for today. But there's something else I'm going to show you guys because I want to actually make this video a little longer. So I want to show you some live examples that I had back when I was trading before the market reversed. Alright, so for example, this is a good example of what we just showed you before. Our purple lines represents our piece of market structure, and we all know who controls the market. Financial institutions that are large and big banks, because they're the ones that control the markets. And retailers, yes, they can make movement in the market, but not as substantial as this. They can't make actual structure. Structure is created by, like I said, smart money, which is the banks, institutions, and hedge funds. Sorry, no, the institutions in hedge funds and in the big banks are, they're both essentially smart money, but that's just how I divide them by institutions and all that. But yeah, so I had my piece of structure here. Then I identified. You see right here, I identified. We're gonna go and replay. We're gonna go and replay. Oh, great! I have to get pro. I forgot to renew my pro. Fuck. All right, but for now, we're gonna identify our point of interest, which was back here. If we look back on our notes, supply and demand or order block or whatever your trading strategy is. I do all of them. So this was a demand zone here because this was a gap. And so it came into this gap, and then what happened was came back again and went up. And so we had some straight movement upwards here, and our take profit was the next high. And the same thing happened again. I came back down. I noticed that there was an order block here, and order blocks are usually footprints. Order blocks are like footprints in the snow, guys. Order blocks tell you that the institutions and smart money have been in the market, and over there they broke the recent high, so the trend's not over yet. So I saw this. I saw this order block, the stop loss, right here, entry, POI, entered. Take profit was the next high. And if you guys want to know more in depth about my strategies, I literally post and all my trades in the Discord, like literally every time I trade it, so you guys can see it for yourself and use it as reference. You can screenshot this if you'd like and use it for reference. But yeah, and people say the smaller time frames are bad, but they're really not, guys. You can use all time frames. Supply and demand, smart money happens at all time frames. It's just about having a system that works for you. So people laugh at you or say things about you like, "Oh, that's dangerous," but they don't know what you're doing. They don't understand. They only understand their perspective, and they're looking at it a keyhole's viewpoint. But yeah, guys, I just wanted to make this quick video showing you some smart money examples and a beginner strategy, a beginner trading plan for smart money to help you guys a little bit. But yeah, and if you guys want to know more information, connect with me at Black Wolves Tribe on Instagram. And yeah, screenshot the trading plan. I just wanted to make this quick video. I'll make another video tomorrow. But yeah, guys, I hope you guys are doing good. Take care of yourself. Just focus on yourself, guys. Don't listen to anyone. Keep your head down and ignore everybody.